We start with a simple question.
Yeah.
Well, what's behind this move?
What's going on?
Yeah, and where do you think it could go from here?
Well, I think it certainly could go down in terms of the volatility in the space, but it's hard to come up with new ways to say the same thing for something that's been going on for 3 years. It just happens to be in crescendo right now, and it happens to be coming at a time when I think there's some real industrial use dynamics that are at work here. But more importantly, I think there's speculation and there is absolutely some supply disruption. So the thing that's probably more fascinating that we'll get into the conversation is, to me, where copper is. And, Dr. Copper historically has been an economic barometer. But gold and silver are truly a function of where central bank diversification, where concern on Federal Reserve policy, where concern on today, I think, most people are talking to just global geopolitical, I should say, instability as being the other dynamic that really triggered things today. Layer in exchange traded funds, retail activity, and a light volume day. And you get the kind of move which feels blow off top-ish, except for the fact that I wouldn't run too far from these trades. And it's not about, hey, I've been saying this for 3 years, but the things that are at work here are not changing as we go into 26. The question is, what's the fair value for gold? There's 3 other smart people here that can probably give you a better view than I can. But I wouldn't run far from the gold trade. I think silver's overdone. I think gold-silver ratios are things you see traders trade all the time. And I think this silver move is somewhat unexplainable.
It is. So this is a really interesting point, as always, that you bring up, good sir. Bottom, which is the fair value on gold, your fair lead strategies, Katie. But bottom one, I said, how do you fairly value gold when there are no earnings? There really are, and I'm sorry to all the dentists out there, no industrial uses for gold, except for...
Are you getting silver in your mouth? Because I'm not getting a lot of silver.
No, but you use it in semiconductors or some rarer stuff.
So you said dentists.
Gold teeth. People always come at me when I say that.
No. Your grills.
No. Well, if you can afford, who can afford gold teeth now? But you get my point, Bonawyn. How do we value gold when there are no earnings? There's no multiples to base this off of.
Fair enough. I hear what you're saying in terms of there being limited fundamentals and the way that you would kind of discount cash flows from an operating company or something of that nature. But the truth of the matter is that it trades somewhat on perception. It trades somewhat on perception around our central bank, and I think there has been a lot of discussion. Tim mentioned it already around kind of that independence and the rhetoric that is likely to come out in the latter half of this year. I think you've also, we've forgotten to mention that you've seen Bitcoin really come off, and that was supposed to be the new, perhaps, store of value. That hasn't proven to be the case. You've seen a lot of correlation between risk, high beta names, as well as Bitcoin. So I think gold still has its perceived store of value. Now, whether or not it has its own earnings, it still is something that has been there. And at the end of the day, people feel like they can put their hand on something tangible. You have some central banks that have kind of eschewed the U.S. Treasury, longer dated type of bonds. You've seen some, quite a bit of volatility on the back end of the curve there. So, yeah, your point is very well taken. There's no arguing again. It's a factual statement.
It's a 25 times earnings on gold because there are no earnings on gold, Katie. That's kind of the point. I think to Bonawyn's point, and we're going to get to more on Bitcoin later, so don't go too down the Bitcoin rabbit hole. But the move on silver and gold has felt, dare I say, Bitcoin-ish. When we're seeing 5% and 7% moves on a metal that may or may not have an industrial use,
right?
That's almost, it sounds a little speculative.
Well, especially silver up 11% today alone, which is really astounding. Both metals have very strong positive momentum, and sometimes, honestly, that's all it takes. It's just a sentiment story, and sentiment is obviously very, very bullish, not even just around gold and silver, platinum, palladium. They all look pretty good on the charts. We don't have any sell signals yet, and gold actually had a pretty recent breakout from a triangle formation within the context of its long-term uptrend. So it did consolidate. It did have that pause to refresh. Silver, on the other hand, has gone, I'd say, parabolic. And when that happens, it does put you on guard for some kind of pivot point or loss of momentum. So we're minding the gaps on that chart. The gap today was about 73. Below that, it started to look a little toppy. But we have this really interesting breakout in the ratio of gold to silver, or silver to gold, I should say. The silver breakout, it looks like it could be even sustainable. So longer-term outperformance could be expected from silver, as we've already seen this year.
Is that the bottom chart there? The bottom chart is silver versus gold?
That's right. That's right.
And so what are we looking for in that chart?
So
Pardon my density.
It's effectively confirmed a breakout above a previous area of resistance. I know it's a little hard to see. I can't even see it this far, but I think I can draw it. So a nice little breakout above the resistance level, and that tends to generate upside follow-through. So we're encouraged by that breakout if you're a silver bull. And it gives us a new asset class that has great momentum to take advantage of.